In this presentation, we will discuss tuition and fees, which is, of course, a form of revenue related to colleges and universities. Tuition and fees. Tuition and fees are required to be recorded as revenue, even though some of the revenues will be offset by tuition waivers, scholarships, and fellowships. What that means is we're going to record the tuition and fees total, even though we're not going to be collecting cash on some of these items. If there's a waiver or a scholarship or a fellowship, then we're going to be recording the tuition. We're not going to be receiving on it. We're going to have to make some type of adjustment for that. You can see that the normal journal entry would typically be debiting the accounts receivable, increasing the receivable, crediting some type of revenue account. We're not going to get the cash, however, so we're going to have to make some type of adjustment to the receivable related to the tuition waivers, the scholarships, and the fellowships. This will make more sense when we start to record these types of transactions and see them in act. Discount and allowance accounts are contra revenue accounts used to record offsets to tuition and fees. So this is similar to a for-profit type of organization. Oftentimes when we have revenue accounts are going to be increasing, things like sales are going to increase. If there's a return, however, then we don't typically reverse the sale. Oftentimes we make another account, which is going to be a contra revenue account, which will be some type of sales returns and allowances, which will basically bring down the net income without bringing down basically the revenue account. We're not going to reverse the sales, the revenue account. We're going to use some other account to offset it. Same idea here with the discount and allowance accounts. However, tuition refunds do not use a contra revenue account to offset tuition and fees. So if it's actually a tuition refund, then we typically, they are charged directly against the tuition and fees revenue account, decreasing it. So with regards to the tuition and fees refund, then we don't have some other account. You would think that if we record the tuition, we would say a debit to cash and a credit to a revenue account to record the revenue. Now, if there's a refund, then we'd have to credit the cash and we would debit then revenue possibly. But normally in a for-profit type of organization, we don't debit or decrease revenue. We usually make, as we do up above, some type of other contra revenue account. Here, no, we're actually going to decrease the actual revenue account in this case. So that's going to be a bit unusual, something a little bit different than you might expect in a for-profit type of organization. Tuition waivers that are given as a form of compensation will be recorded as an expense. So in other words, what if this waiver that we gave, there's a tuition, we said, hey, you're not going to have to pay us, we're going to waive the charge to the tuition, but the only reason we waived it is because you worked as, say, a TA or something like that for the institution. Well, then it wasn't exactly waived, it was basically services were done. So therefore, the waiver, instead of, if we were to record this, we're going to reduce the receivable, but then we're not going to have to reduce the tuition or have some other contra revenue account. We're just going to record the expense related to the service that was done, the barter that happened. So in essence, there was an exchange that happened in that case. Of course, we gave them that, they got some kind of compensation and we got some kind of compensation. Therefore, the waiver was going to be recorded as an expense and as revenue. We recorded the revenue for the tuition, and then we record the expense related to it in the kind of barter situation. Tuition and fees, the revenue is recorded on an accrual basis. So just like normal for-profit type of organization, we're going to be using an accrual basis as opposed to a cash basis. Tuition and fees are often paid in advance, however. When they're paid in advance, if we apply the revenue recognition of the accrual principle to tuition and fees, they are recorded as deferred revenue. So in other words, if we get an advance, just like in a for-profit type of organization, and we get money, say we have some large item that we're going to sell, we don't have it yet, someone wants to give us a deposit, then we're going to go to our vendor and get that piece of equipment and then finish the transaction. That deposit then we couldn't record as revenue because we have not yet earned it. We hadn't delivered the goods in order to earn the revenue. So until we do so, under the revenue recognition principle, accrual principle, we could not record the deposit, but would then have to put it on the books as some kind of liability, often called unearned revenue, with a for-profit type of organization. When we then get the equipment and finish the transaction, we can then record it as revenue, taking it out of unearned revenue. Same kind of situation happens with a college. they might get paid. We might get paid as the institution before we give the education. So if they pay us for the next semester or whatever, a quarter or whatever you're gonna call it on, then we got money before we gave the education, and therefore we can't record it as revenue at the point in time we received the money because we have not yet earned it. So therefore we have to put it in some type of liability account. That liability we're going to call deferred revenue. So it's going to be deferred revenue liability account. Then once we earn it, once we've actually given the education, that's when we earned it in accordance with the revenue recognition principle. We can then debit or take it out of the deferred revenue and credit and record the sales, the revenue account at that point in time. Next, we have the uncollectible tuition and fees. We'll be thinking about it with regards to FASB, the non-governmental, and GASB with the governmental. Now, when we consider uncollectible tuition and fees, you'll note that in a for-profit type of organization, we have to make some type of estimate as to the amount of collections or sales we made on account that will be uncollectible. We have this called the allowance method, typically the allowance method. You can think of the receivables we have on the books. If we have the receivables on the books, we have to have some kind of method to determine how much of those receivables or some type of estimate will not be collected. And on the income statement or the statement of activities, the activity type statement, the income statement type statement, we need to determine of the sales that were made in that time period, how much of those sales are possibly not going to be collectible, and then think about how we're going to report that. That would be in accordance with the accrual basis method as opposed to waiting until something becomes uncollectible in the future, at which point, if we wrote it off at that time, the matching principle wouldn't line up. Therefore, we have to make some type of estimate about what the uncollectibility will be in the certain time period, the same time period that the sales were made. So under FASB, tuition and fees are shown net of any estimated uncollectible amount for private colleges. So when we think about, we're going to have on the basically income statement type of account, statement of activities type of account, we have the revenue, and then we also have the amount that we're estimating to be uncollectible. And we're going to show those basically combined together, subtracting them out, showing them net. The revenue account is adjusted for the estimate rather than a bad debt kind of account. So you'll note in a for-profit type of organization, when we use the allowance method, we typically have a kind of contra revenue account, which is a bad debt account. So note that the concept here would be revenue is going up, we recorded revenue, but we don't think we're going to collect on some of it. Therefore, we're going to reduce, in essence, the revenue that was recorded, because if we're not going to collect on it, it wasn't really revenue. However, in the for-profit type of organization, we would record that in an expense account called bad debt expense rather than reducing the revenue account. Here, the revenue account is adjusted for the estimate rather than a bad debt account. We're going to adjust the revenue account. That again might seem a little bit unusual with regards to a for-profit type of entity, but the concept in terms of the revenue recognition principle is the same. And then we have the GASB side of it, where a contra revenue account like provision for bad debts is used for public colleges. And that'll be much more familiar with the allowance method. So when we consider the allowance method and we consider rather than writing down the revenue type of account, we have another account, which is kind of like a contra revenue account that we would be using much the same as with a for-profit type of organization. We're going to be using provision for bad debt in that case.